Barnes is standing by in Boston right now with Boston Federal Reserve President Eric Rosengren for a Fox Business exclusive. Good morning, Peter.
Hey, good morning, Maria, and let's get right to Eric Rosengren. Eric, thanks for joining us on Fox Business this morning.
Thank you for being here.
Of course, the big question for everyone in the markets and for consumers is, when is the Fed going to start to raise interest rates?
Well, as you know, we didn't do it in September. I was very supportive of not doing it in September. The reason for that is there was a lot of instability in terms of what was happening in China and many of the emerging markets. So we needed time to process exactly what was happening. I think the data that we've gotten since the end of August actually has been pretty positive, that the U.S. economy looks like it's not going to have a large imprint from what's been going on internationally, at least to date. If that continues, 13 of the 17 people that vote on monetary policy and participate in the meetings think that by the end of the year, it is likely that we will be raising rates, and I think that seems like a reasonable forecast. So they have fourth quarter, and this is the fourth quarter, so
right.
It's likely to happen soon.
So we have a meeting. You have a meeting, a policy meeting in October, a policy meeting in December. Just wait for more data. You've talked about the Fed has talked a lot about this. This decision is going to be data dependent. Do you think the data is there yet for raising in October, or would you want to see more data for a possible December move?
Well, as you know, we're getting an employment report at 8:30, so there's still some data that's coming in that I think will be relevant for the next several meetings. So we do need to monitor what's happening with the data. I would say since August, not that much data has come out that would indicate that we have problems, but I think a little bit more data would be useful to make sure that some of the problems going on internationally don't have an impact on domestic data.
But you gave a speech last month in which you suggested that you would like to wait on raising rates, depending on the data. And it sounded, and you said a couple of months either way, would not that make that much of a difference potentially to policy and the impact on the economy. Sounds like you're kind of would like to wait until 2016. Is that fair?
Actually, I think if the data keeps coming in as it has been and indicates that the unemployment rate right now is at 5.1%, we'll see with today's employment report where the unemployment rate is. We've had fairly strong payroll employment, that I actually think it would be appropriate to start raising rates by the end of the year if we continue to get positive data. That's my expectation, that we will get positive data. I think many other participants in the meeting are expecting to continue to have a strong U.S. economy, and as long as the U.S. economy is continuing to improve and we think labor markets will tighten up, it will be appropriate to start raising rates sometime this quarter.
But you've also been very concerned about the Fed hitting its inflation targets, and you made a very strong case in your September speech that you're obviously not there yet on headline inflation. The target's 2%. Right now, it's basically flat. Do you think that's just temporary, and do you think that inflation will start to rise so that you could move by the end of the year and feel comfortable with that?
Temporary factors are clearly having an impact. Obviously, oil prices are down. Commodity prices more generally are down, so those would tend to hold down inflation numbers over the next several quarters. In addition, the dollar has been quite strong. That will also hold inflation down. So I think the data on inflation is unlikely to be showing strongly in the data that we're moving to 2% in the near term. That being said, I do think that the labor markets are looking like they're continuing to tighten up. And so if we want to be reasonably confident that we're going to get inflation back to 2%, labor markets are a key component of that.
Well, what about all of the outside factors, the global turmoil, the slowdown in China, the volatility in financial markets? We've had now a month or two to watch that. Have you seen that show up in the economic data at this point and cause any problems, risk slowing down the economy?
So the trade data has been weak. You kind of expect that, given that the exchange rate is quite strong. Many of our trading partners are weak right now, and that actually has shown up. When I travel around New England and talk to businesses, those companies that are trying to export abroad are having more difficulty with the strong dollar, so that is having an impact. But the more straight domestic data, I would say, has actually been reasonably positive. The consumption data looks like it's continuing to do well, which means that consumers have not been thrown off by what's happening internationally. And so as long as domestic factors don't look like they're being significantly impacted by what's happening abroad, I think it will be appropriate to tighten sometime over the course of this year.
Yeah, and we're here at the Boston Fed because you have a conference today on the issue of financial stability. And I believe I've just learned, I think my colleague Maria Bartiromo wanted me to ask you a quick question as well. Maria?
Peter, we've been talking about the manufacturing story here on set and the fact that factory orders have been down for 9 straight months. We saw the commodities complex completely fall apart with iron ore, copper, and oil where it is. I'm wondering how important that manufacturing data is, or what would be the most important piece of data for Mr. Rosengren?
Maria was actually asking about the manufacturing data, the breakdown in the commodities sector, and how important that is in your analysis, and whether or not those are perhaps among the most important data points for you as you analyze the economy and what steps to take next.
So we look at a wide range of data. Manufacturing data is important. I think the trade data and the manufacturing data are highly correlated. So many of the manufacturers that are having some difficulties and some slowdown are reflecting the fact that we're not exporting the way we would be if the dollar wasn't as strong as it currently is, and if our trading partners were doing a little bit better than they have been. So I think the manufacturing data is very consistent with the trade data. Consumption, residential investment, some of the other components are also important, and they're particularly important to see if there's spillover from what's been going on abroad to the United States. I'd say to date, we haven't seen strong evidence in the data that there's been a strong imprint in the domestic data.
And just finally, if the data doesn't support a rate increase by December, does that get pushed off into 2016, in your opinion?
We should do what is appropriate. So depending on how the data comes in, if we're reasonably confident inflation's going to go to 2% and we see further improvement in labor markets, then we should be tightening sometime over the course of this year. If those conditions aren't met, we should wait.
All right. Eric Rosengren of the Boston Fed, thanks for joining us again on Fox Business. Maria, we're going to talk to Eric for another 3 minutes or so for a little bit of web special content that we'll be posting at foxbusiness.com later today. So look for that.
That's excellent, Peter. A fantastic interview. I would also want to know how closely they're watching global markets and how the markets are reacting to all this stuff. We'll look for your interview later today on foxbusiness.com. Peter, thank you so much. Peter Barnes there with Eric Rosengren.